Good morning. I'm Reza, CEO and founder of Vurial. We're working on a platform that enables mass integration of optoelectronic devices into the surface. It's used in developing multifunctional displays for automotive, consumer market, AR, immersive applications, and also we are working on multi-sensing surfaces for fitness, health, autonomy, automation, and those type of application. So let's start the next discussion. Is doubling down on CVC, PayPal Venture, cashing in on future of external investing. Our guests are James Loftus, Managing Partner, PayPal Venture, and moderator Ellen Ehrenpreis. Sorry if I said your name wrong, a partner at Oric. Let's welcome them to the podium. Thank you.
You did great. That was an excellent pronunciation of a difficult last name.
Mine was easier, I guess.
Yours is much easier. So it's a pleasure to be here today. I have the great honor of being able to come year after year, but this is James's first time, as I understand it, being here at GCV, and the charge that I've been given is to introduce James and PayPal Ventures to all of you. Let you get familiarized with what PayPal Ventures is doing, where they're focused, how they're thinking about the world of corporate venture. And so it's a real pleasure to be here with you, James.
Same. Thank you.
My name is Ellen Ehrenpreis. I'm a partner at Oric, Harrington, and Sutcliffe. I work in our Silicon Valley office. I'm in our technology companies group practice, where I work with a lot of emerging companies and also a lot of investors, including many CVCs that I have the pleasure of working with, some of which are here today, and some of which I've spoken on this stage with in past years. So this is a world that I spend a lot of time in and advise around. So it'll be really fun and interesting to get some of your perspectives. James, you've done many things over a non-linear career. You've been a lawyer. Actually,
my wife would describe my career as non-linear.
So we share a little bit of a history in the law, but you left the law, smarter than many of us, I guess, and you've been in business development, you've been in corporate development, you spent time in the world of financial VC, and now here you are at PayPal Ventures. Tell us a little bit about that journey and what brought you to PayPal Ventures.
Sure. So, I mean, I think the journey it's more probably about me and always wanting to sort of add things to what I'm doing and learn and grow. And so I think that
That's the lawyer in you.
Yeah, I think that was it. I think NYU would love if I said, like my law school skills have helped me throughout the years. But I think really what it was is I started my career as a corporate lawyer, not doing any tech work. I was in New York, as we were discussing, doing we sold Chrysler, I think was the biggest deal I worked on. But then I went to work at Google, did more technology work, and it's like each time it sort of layered on something new. And was able to sort of expand and grow. And I think that's the PayPal Ventures role was a natural expansion of that. I think leading up to that, I had been at Square for about 6 years, running their corporate development team, and had stood up a small corporate venture arm for Cash App, which is their consumer product. And the PayPal opportunity it was really exciting because it was established and it was rolling. And I think some of the problems that we needed to solve were they were interesting. It's sort of a nice combination of the skills I'd had in the past, but also adding new things to that. So,
great. And so, tell us a little bit about what drew you to PayPal Ventures. Tell us a little bit about the platform. So PayPal Ventures has been around for a while, even though you're a relative newcomer, but it's been around for a bunch of years. Tell us a little bit about the investment thesis, where you're focused. Maybe a little bit about just, again, for purposes of introducing PayPal Ventures more broadly to the audience, about the investments that you've made over the years.
Absolutely. I think the thing that drew me to PayPal Ventures, which I think leads into a description of it, was just that it was well established. And I think what I wanted to do was to come in at a platform that was already established and be able to grow that and expand it. And so a little bit about PayPal Ventures. We made our first investment around 2007. I'll say around because I think there are some investments that probably weren't PayPal ventures that we've scooped into the family since then. Since that time, we've made over 70 investments. We have just over 62 active portfolio companies. Our mandate is from the board. We invest off the balance sheet, and our mandate is to invest about 50% U.S., 50% non-U.S. And it's in the things you'd expect, things that are strategically important to PayPal. So fintech, commerce enablement, and then we also invest in payments, and then we also invest in things that are important to PayPal as an enterprise rather than as business. So think about cybersecurity, fraud, and then we've recently launched an AI fund because I think everyone here I'm sure is thinking about AI. And so that's kind of how we think about it. The team is I have folks in London, New York, and in San Jose, and so we do a pretty good job of hitting our 50% international mandate, which is also fun but complicating in that we have startups all over the world now. I think some of the investments that we're really proud of, we're invested in a company called Toss in Korea, which is having worked at Square with the consumer fintech app, a lot of times you just think about how many monthly active users we have. And I think the last stat I checked with them is over 1/3 of the Korean population are monthly active users of Toss, which is just mind-boggling. So we're also in a company called Pine Labs in India, which is, they do a point of sale setup, really successful company. So we over the years, I think if we look at our vintage from 2007 to 2010, we have some companies that are really successful, and we're waiting with the rest of the world for them to go public. But, and then more recently, I think we've shifted to a focus on Series A investing. And so that's been, I would say the last 2 years, especially since I've joined, we've done more investments in that stage.
And tell us a little bit about that. I mean, you joined PayPal Ventures at an interesting moment in sort of the larger market, environment. And I'm wondering about the priorities that you've set for the fund, for how you think about the investing that you're doing, and why the shift to earlier stage Series A.
I think so. The biggest thing for us, obviously, the overall venture market has had a shift, but the fintech venture market probably has had that with an order of magnitude more. And it's obviously we're very familiar with that at PayPal because we look at overall public multiples, we look at multiples of the companies we work with, and they've changed markedly since 2019 or 2020. And so the piece that's been interesting for us, and the reason why we've moved a little bit earlier, is looking at both, where can we make, so one of the things I should say is that we invest in companies that we're convinced we can make a financial return on. That's how my team is sort of graded, is based on our returns. But obviously, we then need to, as I tell my team all the time, we need to do better than if our treasury team had written Sequoia or Andreessen a check, right? How do we outperform that from a strategic standpoint and a financial standpoint? And what we found is that in Series A, there's we get a better look at innovation and at we're able to help more, I think is the other piece. When we've invested in the Series C or growth companies, that's where it's harder for us to compete as well. One of the things we compete on is our ability to support our portfolio companies, our ability to engage with them both in doing business with PayPal, but also we have an advisor network where we have 150 PayPal executives who have raised their hands to help work with our portfolio companies. They don't move the needle with a company that's a $1 billion valuation company, but they do for a Series A or a Series B company. And so that's been the piece that I think strategically we've done. And then I think it'll be familiar to everyone in the room. The market, I think, has shifted where the nice part about Series A's right now is they probably raised their seed less than 2 years ago, which means they missed the kind of the fintech, I won't call it a bubble, but the fintech froth that happened in 2020 and 2021. And so it's been easier to find investments that we like and investments we feel like we can generate a good return on for the Series A, whereas the Series B and Series C companies, including ours in our portfolio, I think are searching for the right market conditions still. We have some that are doing well and some that are not, but I think the market's just naturally shifted and you say, okay, we're able to make markets in Series A companies easier than we are in the Series B and Series C companies right now.
And given that shift to investing at an earlier stage, have you shifted philosophically in terms of how much you are willing to invest and allocate to follow-ons? Whether you lead or participating as part of a syndicate, how are you thinking about that as you've made this shift on the continuum of maturation?
Our check size has stayed relatively the same. So I think I think like there's a natural floor for us because we're still a corporate, and not only a corporate, but we're a highly regulated one. So we do a fair amount of due diligence vis-a-vis a sort of financial VC. And so for us, like writing a check that's much smaller than 5 million, I don't think it's worth it for the startup, quite honestly, but it's definitely not worth it for us. And so if you look at our target investment to be kind of between $5 and $10 million, the strategy's changed because we haven't changed that check size. And so what's happened is Series A's have changed markedly in the last 2 years.
Yep.
And they've gone from, I think if you had talked to me even a year ago, I would have said, mostly we don't lead, like we like to find someone else to partner with, we like to be the second biggest check in the round. And you could be the second biggest check in the round at $5 or $7 million in a $30 million Series A. There aren't any more $30 million Series A's. And I think that's been, for us, we're starting to see more of the, what I'll say, like in 2018, 2019, like the typical size Series A was more $15, $20 million. So all of a sudden, like $7, $10 million is the biggest check. And so we've had to shift to writing term sheets. We've had to shift our sourcing strategy. I think our sourcing strategy in the past was spending a lot of time with our peer firms, and now we're shifting that to spend more time with seed firms, to spend more time sort of so that we're on the front foot when those deals come along, because as much as we like working with our peer firms, we're realizing that they're doing the same thing. They're realizing that there isn't room for 2 big checks in the round. And that's created, I mean, like for us, one of the things is it's created some strategic conversations we've had to have. We don't typically take board seats because it's complicated to take board seats as a corporate, but it's also complicated.
Complicated for you and complicated for the company.
Yeah. Like this is my former lawyer stuff. I'm like, how do I balance fiduciary duties? But I think the other complication though is to have a lead that doesn't want to take a board seat is weird.
Yeah.
Being weird is never good.
I have some entrepreneurs who would really like that, actually.
Yes. But what we found is like a lot of times what we do then is our round contributes a nominee that we find in the industry that actually probably, quite frankly, is probably more helpful to the company than we would be as financial investors. I think that's the dirty secret is if you could fill your board up with industry experts, you'd probably be better off than with VCs.
So that's interesting. So not taking a board seat at an active role at the table, how do you manage and actively manage staying engaged with your portfolio companies and delivering that value, right? CVC's primary value, I think, from the perspective of the entrepreneur is the ecosystem, the introductions, the sort of strategic guidance that can be really leveraged from the CVC. How do you deliver that in a way that is meaningful to the company when you're not, sort of in the boardroom actively engaged in that way?
So I think so our strategy has always been to take board observer seats, and so we are in the boardroom in that sense. And I think that's, and we have good practice there of how do we make sure we're helping the company, how do we exert our influence without having a vote. And I think over time I've seen, and we've seen at PayPal, that that vote, what gets actually voted on in board meetings, like in the sense of so what you have as a board member is a vote, but we don't, board observers are in for 95% of the meeting content. You can build that relationship with the CEO. And I think because that's been traditionally how we engage with our companies, it doesn't feel like we're even if we're leading, we don't take a board seat, it doesn't feel like we're missing out on something. Yeah. We've kind of built our whole system in the way that we engage with our companies that doesn't involve an actual board seat. Yeah. But we're I would say for probably 85% of our companies we're in the boardroom, as an observer. So.
Yeah, and since we're on the subject, is there anything unique? Obviously, there are a lot of folks here running CVCs thinking about how they engage, particularly on the front end with potential portfolio companies, what kind of term sheets they're going to deliver if they're going to lead a round. Now that you're doing more early stage investing and leading more rounds, how are you thinking about the term sheet? Anything you have to have, any must-haves, any like-to-haves? Where do you find either the pain points in leading, or not, or where do you find really strong alliance with the portfolio companies?
I mean, I think as corporate venture, I think the most important thing for us is to make sure that we've stripped down what we're asking for that's unique to us as a corporate to really what we need. And so we have a lot of internal debates about. I think our side letter is relatively straightforward, and it's we probably ask for board observer seats at amounts of investment that are a little bit low, but our pitches that you want us in the boardroom and that will be helpful. I think we have what everyone else has. We're a public company, so we have pretty hefty information requirements. And then we've had a back and forth on M&A rights. I think that like the one thing we've always been cautious on M&A rights is, as you mentioned, I worked at Andreessen Horowitz for 2 years, and I remember talking to one of the partners there about, what should we tell our portfolio companies when they're approached by strategic investors? And like, I mean, it's no secret, and by the way, this is still happening. Like financial investors are telling their companies, like, strategics are going to come in, they're going to create strategic swirl for you, they're going to ask for all sorts of crazy things in their side letters, and then they're never going to deliver what they promise. And so I took that to heart, and I try and make sure that for PayPal that we do the opposite of those three things, right? That we co-invest with a lot of our competitors. I think if you look at cap tables, we're on cap tables with Stripe's venture team, we're on cap tables with all of the big banks' ventures teams with Visa and MasterCard. And so we don't like, and we make sure that our business development team doesn't penalize anyone for taking money from an investor that's one of our competitors. We keep our side letters pretty slim. On the M&A rights side, we have like just a pretty light notice provision, which is, I tell companies it's just so I don't look dumb when they go to do that. And then I think, but the biggest thing is we really focus on delivering the value that we promise on the front end. And that's been, I would say, since I joined, that's what we've been doubling and tripling down on, is how do we, I think the other thing is, and this is important, is we have a lot of portfolio companies that come in and think if we write them a check, they're going to sign a BD deal with PayPal the next week. And like, PayPal's hard to do business with. And the reason we're hard to do business with is that we're regulated by like 1,000 different entities, right? And so like I always joke that like it's way easier to get through the diligence process to take a check from us than it is to sign a contract with us. And so, but we can help, like your advantages in going through that process as one of our portfolio companies are giant compared to coming off the street. You know, we can help navigate that. And so I think, but a lot of times the first important conversation is actually what we're not going to be able to do, so that you kind of manage those expectations. It's like we can make introductions, we can guide you through the process, but like we don't have a ton of partnerships with startups because startups generally are not in a regulatory sense, mature enough to get through that. That said, like I said, what we can do is, like, if you're in the financial services space, I have 4 experts for anything you do that work at our company. Yeah. And like, how can I make sure, one of the things I've really focused on is I can say that, but how do I make sure that when you need that help, I can get you someone that knows how to interact with US financial regulators or UK financial regulators, or actually one of the big benefits we provide is our comms team obviously like knows folks at 20 different publications, and like working with startups to get stories placed and do that is one of the things we work on. So
yeah, so I would be remiss if I didn't ask this next question because I was specifically asked to ask it. The GCV folks would like you to talk about what you look for in co-investors so that the folks in the room understand how and when it might be advantageous to engage with PayPal Ventures, what kinds of opportunities you're interested in and might want to partner on, but really sort of a little bit of a roadmap for how folks should think about when there might be an opportunity that they can work with PayPal Ventures on.
I mean, like, obviously we're strong believers that strategic investors can bring a ton of value. So I think for us, that the biggest thing is how are we putting together a round that's going to deliver long-term value to the company beyond the dollars, right? Like, and I think that's the important thing. I think it would help that we're all the same. They're all the same speed, diligence-wise, like that. I think everyone's been working on that, like for diligence approvals. But that's the biggest thing is, like, can we put together a package where we say, hey, you know, especially, I think you need to be thoughtful when what starts to come together would be viewed as the outside world as a strategic round, right? So there's a round where one of us is involved, and then there's financial investors, and no one looks at that and kind of calls that a round of strategics, right? And so I think when you start to do that, when you partner together with someone in this room, I think making sure that that the story to the market is really strong is important. And by the way, there's nothing inherently good or inherently bad about either type of round. I think what's important is making sure that the way it's put out to the market is, I mean, because there's and maybe I'm chasing ghosts, but I'm convinced that there's always the folks that if we beat out financial investors, they're like, well, that was a strategic round, which is like in some way that's like less than like a round with financial investors. And I disagree, obviously, but I think it's really, really important to make sure that you're not just, I mean, obviously if you put the round together, you've convinced the company of the value, but making sure that the marketplace understands that it wasn't some sort of like, that it wasn't less than the round they put together. And like in financial services, for sure, we've done rounds where it'll be us and a bank and MasterCard or Visa, and those are incredibly and powerful partnerships to have on your cap table if you're building a company in the financial services space. So, and we make sure that that's kind of what gets spun out to the market then, that it's the right time for the company to do that, and they're getting the right things out of it.
Yeah. So that's how you think about, you know, aligning or investing with others, you know, either financial or corporate investors. How do you think about moving back internally? How do you sell an opportunity? How do you engage with the BUs, or how do the BUs engage with the fund to think about both the financial value that you can drive, but also the strategic value?
So for me, I think the hardest thing for PayPal is that, and this is true for anybody, but like you're no matter how strong you are in your industry, like the things are moving so fast outside the company, especially in the startup space. And so what I view the biggest strategic value we can bring back into PayPal is being able to coalesce everything we're seeing, whether it's in our portfolio or, you know, like you're meeting hundreds of companies here. You really have a good view of like what the currents are in the market, and bringing that back in both from a market intelligence standpoint, but also a product decision-making standpoint to help understand what's happening out there, what's happening in the US market. One of the things I think we do well that's pretty valuable is in fintech in particular, things can be very idiosyncratic geographic market by market. We're not like, there are plenty of markets that we're not going to do business in, but that doesn't mean we can't learn something out of it. Like anyone who like we don't do business in China, but anyone who's ignored what's happened in financial services in China over the last 20 years does it at their own peril, right? Like those things really do matter.
Yeah.
And so I think that those are the kind of things we tend to bring back to the company. But the key is like, how do you distill all that into a useful format for the product managers?
Yeah. So I know we're running out of time, but I want to give you just a small window of opportunity to talk about the AI fund. You invested recently in Rasa. You led the round or co-led the round, which was you know, widely reported. Talk a little bit about that, the synergy with PayPal Ventures. It's not necessarily immediately obvious what the synergy is, and also how you're thinking about AI and the new AI fund.
So AI was probably the biggest strategic shift we've made in the last couple of years, and that is in that we made a decision that AI was important as a technology, and so we were willing to invest outside of our sort of traditional swim lane of financial services. And one of the reasons I really liked Rasa being our first investment is it did kind of mark to the world that like, in AI, we're interested in everything. Like it doesn't have to be financial services. It doesn't have to be something that you'd naturally think of PayPal. And I think our view of that is that AI is going to be a technology bet, not a sort of product bet. And so that's really important for us. And so I think that like I felt good about that announcement, because it was like one of the things I think when you're a vertical focused VC is like, how do you tell the world, you know, call us if you're an AI company that doesn't, like I think a lot of AI companies who aren't financial services wouldn't think to call us.
Right.
So I think that was one of the things that was really, really exciting about that investment and about that announcement. So
yeah.
So if you have good AI companies, send them our way.
Great. Well, thank you. I think we're out of time, but it's
Thank
such a
you.
pleasure. I'm glad everybody's gotten a chance to welcome you, meet you, and hear a little bit about PayPal Ventures.
Awesome.
And you're going to stay here for a little while? You're going to hang out?
Yeah, I'll be around the rest of the day.
You'll be around. Thank you.
Thank you.
Thank you.